Let's take a look at Wall Street then.
Morning, Shriyansi. There were Fed crucial minutes of the meeting which had to come yesterday, and that has signaled that there could be a higher risk to inflation going ahead, and hence traders were anticipating there could be a scenario of interest rate for higher for longer, and that's what actually created a little tremors in US markets yesterday. If you see S&P, that one posted a modest gain on Wednesday. Traders was assessing that the potential of future how Fed rate cut is going to pan out. There is a persistent inflationary pressure. Broader market index did add at 0.6%, closed above 5,900. Nasdaq, that one slipped marginally only. It closed at nearly 19,478 level. Dow Jones do outperform. Now we have earnings trigger going ahead there as well. Three majors, they are though on a pace for a second consecutive weekly loss. And the minutes actually clearly indicated that that reflected that all the committee participants were a little bothered about the inflation pace going ahead. That's what we saw, that the modest kind of gains which came in US markets yesterday, though Dow did outperform yesterday. And in fact, bond yield has also crossed a level of 4.7. This is a level that's the highest level seen after April 2024. So bond yield did create some news yesterday for sure.
Well, absolutely. So nothing to write home about. Just a slight recovery is what we saw coming in, at least when it comes to the S&P 500 as well as the Dow. But with that, let's also take a quick look then at what oil prices then did. Because when you take a look at oil prices, fell more than 1%. Weighed by that stronger dollar as well as large bills in US fuel inventories last week. So this is a number that we've been tracking for a very long time, because largely you've seen prices being range bound, except for this year, except for the start of this year, in fact, where they broke out of that range that we saw coming in for oil prices. So currently, when you take a look at the moves coming in for oil prices, Brent crude was down just about 78 cents, or over a percent, a little over a percent. Around those $73 a barrel levels is where Brent crude was also at. And when you take a look at US WTI as well, you're taking a look at a downtick of just about 1% coming in there as well. $73 a barrel is where that one was also at thereabouts. So those were the kind of levels that you saw coming in for Brent as well as WTI. Both benchmarks had risen more than 1% earlier in the session. So broke out of that range, but also still pulled back a little bit. A stronger dollar is what was pressuring prices. Along with that, you did have that number coming in terms of US crude oil inventories. But other than that, limiting the losses, you do have oil output from the Organization of Petroleum Exporting Countries. That is something that fell in December after 2 months of increases, as field maintenance in the UAE was something that the market was looking at. Also offsetting a Nigerian output hike. So that is something that we were tracking, at least when it comes to oil prices. And when you take a look at gold as well, that's the one on the flip side that was climbing, just about 0.4% uptick coming in for gold as well, on the back of that weaker than expected payrolls report as well coming in for December. That is something that provided a little bit of reassurance in the market as well, that the Fed could be less cautious about easing rates this year, and that is something that the market has been tracking, at least when it comes to gold.
If you like this video, then like, share and subscribe to ET Now.